Big picture first, a lot coming at us. We're trying to figure out, and I think a lot of it has to do with how long this war goes on. But short term, long term, how are you thinking about the global energy markets?
I would say both short term and I think short term, we are right on the precipice of what could be a global energy crisis. If we don't get traffic moving through the Strait of Hormuz soon, and even at a reduced rate would be fine, but we've got to get some sort of movement going. If we don't see that by the end of next week, I would say that we're looking at shortages across Asia, and all sorts of other dislocations that are going to happen simply because you've got tons of tankers just sitting there.
Hmm.
Okay. You've got storage facilities filling up to the point where producers in the Middle East are already having to cut production, and yet that oil is desperately needed everywhere else, particularly in Asia and then Europe. We've already got a crisis in natural gas prices in Europe simply because Qatar has shut down natural gas production. And that's not something that can be turned on immediately. That's going to take a while to restart, even if the hostilities ended tomorrow. And I think that the world is really waiting to hear from the Trump administration what are their plans to alleviate this crisis, because it doesn't have to get as bad as it could get. There are steps and things that we can do right now to start alleviating this crisis.
Ellen, like what, for example? Does it mean reinsurance for ships that are in the region to provide at least confidence to the folks who are at the shipping companies that, okay, your investments will be protected? What could the Trump administration do?
I mean, that's I would say that's like the tip of the iceberg. I
Okay.
mean, we need to see some concerted military effort to protect ships. Now, I understand that's very difficult when the primary issue here are drones that are flying, and it's really hard to protect against that. But there's got to be some kind of military presence protecting tankers. There are other things that can be done. They can reroute ships out of the current traffic scheme that takes them right through Iranian waters to a shipping route that's farther south that used to be used in, before 1979, that might take them somewhat away from the Iranian shoreline. They can make efforts to, and I said this recently in a piece for Atlantic Council, to remove the Iranian military presence from certain islands in the Strait of Hormuz that ships have to pass by in order to get out. If they can, if our military can remove Iranian troops from those islands, then and there's a much better chance in ships having actual safe passage. And then there's just this issue of these drones flying everywhere that are now starting to hit oil production, oil facilities, oil infrastructure across the Middle East. There was an oil field in Iraq that was hit recently. You've got refineries that are being hit. These are the kinds of things that can't necessarily be repaired quickly and that are also jacking up oil prices in addition to this tanker crisis.
Well, it's interesting. We've been thinking about history as a guide or not as a guide, Ellen, and we were talking with a guest about the energy crisis during the 70s, right? When there were lines in the United States and odd and even license plates. We
Yeah,
certainly
we brought that up with Steve Moore
exactly.
earlier this week.
And we've talked about, early 90s, right? The Persian Gulf War and what we saw in terms of energy prices. You've got, it's fair to say, you now have the US that's kind of has energy independence. You've got alternative energy at play. So what's similar? What can we lean on in terms of history? What can we not?
So I think that the US, I wouldn't say we're energy independent, but I would say that we are particularly isolated
Okay.
from some of these issues that other countries are going to face much sooner than us. I mean, some countries have ample storage. China's got a lot of oil in storage, but other countries don't. And so they're going to start to feel the effects first. It's interesting. These are the two historical examples that were pulled. I would actually look a little bit farther back to the Suez crisis in the 1950s. And actually, before Britain and France went and invaded the Suez Canal to try to take it back from Nasser. They and the United States, all three of them, coordinated plans for what to do in the event that there was an energy crisis involving the Suez Canal. And there were actually all sorts of plans put in place for which ships would go where and how Europe would be supplied with oil in the event that they couldn't get it through the Suez Canal. And the fact that we didn't put these plans in place, we didn't even reach out to communicate to the people who might be most affected by this, I think is a serious problem, and we should be correcting that. We should be looking at this example, establishing coordinating committees, talking to these Asian countries, and seeing what can be arranged so that we can make these oil shortages that they might suffer less, particularly if this military confrontation is going to last for 6 months now. I mean, just earlier we were hearing 4 weeks, and now we're hearing 6 months. So, there are things that we can do to help. And I think that we're not necessarily doing them.
We're speaking with Dr. Ellen Wald. She's president of Transversal Consulting. She's senior fellow at the Atlantic Council. She's the author of Saudi Inc., about Aramco and the country of Saudi Arabia. I bring that up right now because a story just crossing our Bloomberg terminal. This is a Bloomberg exclusive about how Saudi Arabia has stepped up direct engagement with Iran to try and contain a war in the Middle East that's wreaking havoc and stressing global markets. This is according to several European officials. Bloomberg News is the first to report on these Saudi efforts. You know the country of Saudi Arabia very well. You understand how inextricably bound it is to Aramco and the oil industry. As the price of oil goes up, that's a good thing for the Kingdom of Saudi Arabia. So there is this, it's an awkward question to ask, but there are these sort of competing tensions here when it comes to Saudi Arabia and its role in ending this conflict.
Well, let's remember, it's only a good thing for Aramco if they can actually sell oil. If they can't actually sell any oil at, $91 a barrel,
it's just sitting there and it's at risk. Yeah.
Now, Aramco is actually in a very unique situation, and they have the ability to send oil out to their port in Yanbu, which is on the Red Sea. And they can send about 7 million barrels a day that way. And so they have that ability. They're using that ability. They also have oil stored all over the place, and that they can utilize at least to avert, energy shortages, or they can fulfill their customer orders from that for a period of time. Then they'll obviously have to refill their storage. They could make a lot more money if they could sell more than 7 million barrels a day, but they can't get it out of the Persian Gulf. So it's kind of interesting. I do think that the real winners here are Russia and the U.S. oil industry. If the U.S. oil industry, or at least some parts of the U.S. oil industry, could put more rigs into production and produce more oil and sell more oil, they could certainly make money off of this. And Russia is, of course, making a lot of money as well.
Well, do we see U.S. producers kind of kick into high gear over this, or not so fast?
So this is the interesting question, because initially I think they're very wary of putting in more capital, of doing this, because they've been burned before. And so I think that, if they were receiving some kind of guidance from the Trump administration, some kind of thoughts on what would be helpful, they might be likely to put more investment in to produce more, if they had a sense that, okay, yes, this is going to be valuable over the next several months, as opposed to, well, the conflict could be over in 5 days, and then, we've just wasted our time and money.
Hey, one thing I wanted to ask you, for some reason, because I have my dumb moments, is China and energy. I know that they are reliant so much on the global energy markets, but I had no idea all the refining that goes on there, because I know that they specifically, the Chinese government, I think this was earlier this week, has told the country's top oil refiners to suspend exports of diesel and gasoline. I didn't know that they were the third largest supplier of oil products into the region. So I do think about where the pressure comes maybe from the U.S. to kind of put an end to this, because how much does China get hurt in all of this?
Well, exactly. I mean, China gets huge amounts of oil and products from the Middle East. They're also, by the way, invested in refineries and in petrochemical facilities in Saudi Arabia. So they may be losing money in that there also. But yeah, China is saying, hey, we need to conserve this for domestic use, because we can't necessarily depend on these, imports that we may have been getting from the Middle East. So we're not going to be selling to the region. And now they're leaving, they're leaving other Asian customers there high and dry. And they're saying, well, we used to get this diesel, from these refineries in China. Now where are we going to get it? We can't get it from the Middle East. And I think there's a whole lot of dislocation that's happening now. And I do believe the market will sort it out.
Okay.
People will have to pay higher prices, but there's also this element of we're missing a huge amount of supply right now.
Hey, Ellen, we only have 20 seconds left. We started the conversation out. You said if things don't get cleared up by the end of next week, then we'll face a full-blown crisis. What does that mean for oil prices? Just 20 seconds.
Triple digits.
Triple digits.
Like how far? Do we go back up to 140?
I definitely think 120 is possible. I mean, we're already at 90,
Yeah,
92. So if nothing moves, then we could definitely see 100, I would say, by early next week.